Hello and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we are very pleased you have joined us for the Precious Metals and Critical Minerals Conference. Our next presentation of the day is from Blackrock Silver. Please note you may submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for a one-on-one meeting by clicking Book a Meeting in the top toolbar. At this point, I'm very pleased to welcome Andrew Pollard, President, Chief Executive Officer, and Director of Blackrock Silver, which trades on the OTCQX Best Market under the symbol BKRRF and on the TSXV under the symbol BRC. Welcome, Andrew.
Thanks very much, Greg. How you all doing out there? It's good to be here. It's funny you said the Precious Metals and Critical Minerals Conference because in the last couple of weeks, silver has just been added as a critical mineral down in the U.S. This is a very exciting time to be presenting our story here. I think it's been a few years since I've been on this forum. And in that time, we've taken this, our flagship project from discovery hole to now we're the next emerging developer in America, right as the world's actually starting to give a damn about silver again. Here we are, silver's pushing its all-time highs on a nominal basis. But when you look back historically, you go back to the 1980s when it hit $50. In inflation-adjusted dollars, that's $190 today. There's still a long, long way to go for silver to really continue to keep capturing hearts and minds here. And the best thing about this move this year, which, silver has been the #1 performing asset class out there. It's trounced gold, it's trounced the S&P, it's certainly trounced Bitcoin, but you're not even hearing about it in the general forums. You're not seeing it on CNBC or Fox Business. This is still very early days, and we're excited to be stepping into the spotlight with our project as we continue to de-risk it and hopefully be the next American silver producer, right as, I guess, the wind's right at our back. So without further ado, let's get into the story. I've already made some forward-looking statements, and I'm going to continue making them because we're not a story in stasis. We're driving this forward very, very quickly. So, from a high level, Blackrock Silver today, we're trading around 190 million US dollars in market cap, or $270 million Canadian. When we first got this going back in 2020, pre-discovery hole, we were $5 million market cap. And if you tell me 5 years ago that I'd be sitting here a $270 million valuation and be pissed off about it, I probably wouldn't have believed you. But we're still quite undervalued based on a lot of different peer comps. But the market's starting to take notice, as you can tell by our performance this year. We're starting to capture a lot of attention from the various analysts that are covering the silver space globally. Right now in the silver business, there's really only 5 other development stage stories out there. So, even though we've got quite a lot of analyst coverage as it is, I expect we're going to be picking some other big names up in the not too distant future here. We've had a lot of support, certainly from our investors over the years. Eric Sprott is obviously one of the most well-known names in the business. He's been buying us hand over fist this year and going really all in on our story. He thinks we're ridiculously undervalued, and I think you can even look to buys as of yesterday where he's continuing to double down, and he already owns nearly 50 million shares in us. So he sees the path that we're really charting right now. We're right in a sweet spot now where we're about to come out with what will be some of our largest catalysts of next year, and they're coming down the pipe in February, which will be a brand new resource estimate and a brand new PEA, brand new economics on our deposit, as we continue down our path to getting this thing permitted as well. What I can say about the analysts that do cover us is that the consensus price target ranges anywhere between $1.30 and $1.70 Canadian. Today, as I last checked, we're trading at about 79 cents Canadian. So, there's still a long, long way to go. So our flagship project is called Tonopah West, and we're located at literally the halfway point between Las Vegas and Reno in the silver state of Nevada. There's no better place in the world right now to be looking to bring a project like this into fruition than being in America. But one unique advantage we have is that our entire mine plan, our entire deposit is on private land, which means it shrinks down the number of agencies that we actually need to seek approval from to get this thing going. Really, what this means is that we're only really seeking approvals from the county and the state of Nevada, which leads to a very, very expedited permitting process. As I mentioned, the Trump administration, for the first time ever, just added silver to the critical minerals list down there. And, it's kind of funny because I see a lot of other CEOs talking about how, momentous this is for them. And I laugh because they're not even in America. We're positioned to be the next silver deposit to break ground towards development, with an opportunity to be the only one that can be fully permitted during the Trump administration, which means that we stand to get a lot of help as we go and look to build this down line, both in the terms of expedited permitting, tax incentives, and potentially a lot of help when it comes to actually getting the capex of this thing financed. Our project, is a standout amongst just the other developers simply because of the grade. In mining, grade means margin. Grade is seen as king. And this is the highest grade development stage story in the world right now by a huge, huge margin. Last year, we put out our first PEA on this project, and that established a head grade of 570 grams per ton silver equivalent. That puts us 55% higher head grade, the grade you're actually mining at within the stopes, than the next closest developer peer comp out there. And one very unique thing about our project also is the fact that, we report in silver equivalents, and a lot of other companies do too. But what stands out about this is that our silver equivalents are only silver and gold. There's nothing else wrapped in there like base metals. There's no lead and zinc. And what that allows us to do is process it very, very cheaply compared to others, meaning we don't have to go through a lot of extra steps in the process flow sheet. We don't have to get smelters involved. Literally with our ore, you just crush it, you grind it, and then you run it through a Merrill-Crowe system. This is one of the few projects in the world in the silver business that can be made with a doré at site. So not only are we higher grade than any other developer out there and most every other producer in the world right now, but it's going to be cheaper and quicker to process too. So the economics on this are going to be amongst some of the most robust in the world when all is said and done. So our resource from a global perspective equates to about 108 million silver equivalent ounces. Now we've broken this down into two different classifications. We've got 21 million ounces in the indicated category at just under a half a kilogram per ton block diluted grade. And then we've got another 87 or so million ounces on the inferred basis at just over half a kilogram per ton block diluted grade. In 2024, in September of last year, we came out with our first PEA, and that PEA was just sort of putting economics around what we've done so far, and it outlined a potential operation that would produce in the order of 8.6 million silver equivalent ounces per year at cash costs, at all-in sustaining costs, of under $12 an ounce. Today, silver's trading at $58. So, I don't care what business you're in. If your cost of production is 12 and you can sell it for 58, that's what we call a bit of a healthy margin. Now, back then, we used a base case for economics of $1,900 gold and $23 silver. And at that, we were already looking at a after-tax IRR of about 40%. And a NPV to capex ratio of about 2-to-1. So at those base case economics, it's about $326 million NPV. And at the time, we put an upside case in, which was the base case economics plus 20%. And what we showed is that our project's got a lot of torque to the upside. So at 2280 gold and 2760 silver, our NPV goes up to $500 million. and our IRR goes up to 54%. This, because of the grade profile and the very easy metallurgy, is a project that's going to work in any pricing environment. We don't need $58 silver. Hell, we don't even need $23 silver for this project to work. But what you'll see is it's got a lot of leverage to the upside, and even the upside case we used is now nearly less than 50% of what spot is at. So the Tonopah Silver District, we're the first group to come in since production shut down nearly a little over 90 years ago, I guess. But the Tonopah Silver District itself was one of the most consequential precious metals discoveries in American history. It's actually the reason why, to this day, if you go on the highway outside of Vegas, it will say, "Welcome to Nevada, the Silver State." Nevada is the Silver State because of the Tonopah Silver District. This was the second largest historic silver producer in Nevada, only behind the Comstock lode. But whereas the Comstock petered out naturally, the Tonopah Silver District, we've now definitively shown, did not stop producing because they ran out of a lot of high-grade gold and silver. They stopped due to some technical issues of the 1920s. This district, though, in 30 years produced nearly 400 million silver equivalent ounces. And if you look at the historic production on this slide, that 400 million ounces is broken down between 174 million ounces of pure silver and 1.8 million ounces of gold. So it was producing silver at about 100 to 1 silver to gold ratio. Now, one of the other standout things about that historic production record is that all of that production came from just 7.5 million tons, meaning this is a district that is obscenely high grade, but also the metallurgy here was phenomenal. Those old timers left no meat on the bones when they were processing their ore back then, and that was just using old time stamp mills. So we're the first group to come back in since production shut down. And in 5 years since we made our discovery hole on the project, we're now showing this has the potential to be one of the lowest cost silver and gold mines in the world when we drive this thing forward. I've touched on a few key aspects of the PEA, but some things that I guess from a domestic perspective that I'd just like to raise is that America right now produces very, very little silver, only 32 million ounces a year. Just in terms of what it consumes on a yearly basis, it's, they're consuming 75 million ounces or so, which means they're having to import this. If we bring this online, our contribution to domestic production will jog it by about 15%. Depending on the year that we're in. So anywhere between 12 to 15% will increase domestic production. Now, when we came out with this last year, it really led the groundwork to all of the work we've done at the project since. And the two things that we really wanted to focus on were this PEA came with roughly an 8-year mine life, and we really wanted to show that this isn't going to be a short-lived operation. So we've done a massive expansion program this year, and we're going to be coming out with a brand new resource and a new PEA in February of next year, where it's our goal to take our mine life from the 7.8 years that's laid out in our last PEA to between 10 to 12 years. At roughly the same throughput ratio. Now, the other thing we've already addressed was that this PEA was based off entirely a 100% inferred resource. And it laid out a 2.3-year payback period based on those base case economics, that $1,900 gold and $23 silver. One big pushback that we had against our story up until very recently was the market really didn't believe that our ounces were really as good as they looked. They didn't believe that they'd stand up to scrutiny, which in mining terms means a tighter drill density. And just in September of this year, we came out with our first indicated resource, and it was our goal to convert the first 2 to 3 years worth of production based off of this mine plan from inferred to indicated, effectively de-risking the entire decision to break ground on this thing and ultimately see it developed. And we were quite successful with that. converting about 100% of our inferred ounces to the indicated category, which shows that we're able to effectively do that moving forward as well. Now, in terms of how our production profile would compare to every other large silver producer in the world right now, what you'll see is that this is something that is going to be meaningful, whether we bring it to market ourselves or whether someone buys us to build it. This is something that's going to move the needle for just about every large company in the world. What you'll see, I highlighted here the other domestic silver producers in America currently. What you'll see is that we've got the potential to be one of the largest silver dominant mines in America when all is said and done. Now, when you look at our just production profile, and then you look at all the ones just directly left of us, you've got Santa Elena, which is First Majestic. You've got San Dimas, which is First Majestic. You've got Las Chispas, which is Corp. Every single one of those to our left were single asset companies that were bought out for substantial premiums by the large caps. So what I'm getting at is that this is something that should move the needle. But what should really stand out to you is the potential for some of the lowest all-in sustaining costs in the industry as we drive this thing forward. So we just put out the first of a double header of resources that's coming down the pipe shortly. And this resource from September was that indicated resource I told you. It was our goal going into that to drill out between 1 million and 1.5 million tons, which represents between 2 to 3 years worth of production based off that throughput. And ultimately, we ended up delivering 1.33 million tons there. Now, what's interesting is that we've got a 180 gram per ton silver equivalent cutoff. And when you just look at our indicated grades, just our silver grades or our silver grade on the indicated is 220 or our gold grade is 2.5 grams. Both of those independently are significantly above the cutoff grade, meaning one of these commodities more than pays the bills. And then the other, if you used it as a byproduct credit, you'd be producing it at seriously negative cash costs. So very high margin operation. Now we're moving this forward on a dual track. So we're not only focused on growing the project, optimizing the project, but we're also focused on de-risking this and getting this thing permitted so that we can ultimately break ground with an aim to start test mining this thing in 2027. And we're well on track to do that. So we've been doing a lot of the hard yards, the boring, baseline environmental data collection stuff behind the scenes that's going to put us in a position where we'll be able to hand over all this data and our mine plan, which is effectively going to be based off of this upcoming PEA, mid next year. And then from that point, it's just the state and the county. And what's nice about, permitting on patented claims, which our project is that there's a very prescribed, defined process with defined timelines. It's almost like getting an addition built on your house permitted. So that 400 million ounces of historic silver production, it happened over a strike length of about 4 kilometers. And what you'll see is that our project is where the last 2 operating in the mines in the district stopped off. So the district was effectively discovered in the east, and over time from the early 1900s to the mid 1920s, it worked its way westward. The last mine in the district was known as Victor, and they were mining what was the thickest vein in there. Where they stopped mining it, the vein was 24 meters thick. And they stopped mining because they ultimately flooded it out as they went underground deeper and deeper and deeper. There was just some technical issues there. The company ended up going bankrupt due to those technical issues and due to the onset of the Great Depression in the lead up to 1930s. And this purple claim block here, the Tonopah Extension Mining Company, ultimately got picked up out of Chapter 11 in 1930 and held by one family ever since we got our hands on this. This time 100 years ago, Tonopah was referred to as the richest place on earth, and we're picking up right where those historic miners left off. This map here outlines our three different deposit areas. The red showing the roughly 108 million global silver equivalent ounces that we've got defined. We don't have three different deposits or three different developments. This is one big cohesive system. Now, we've done a lot of work since this project came out. Now, we've drilled out roughly 4.5 kilometers or so of strike along two different sets of rings of mineralization. But internal to that, there's big gaps that we've been filling in. The areas that I've highlighted represent the expansion potential that we've uncovered and locked in since the last resource and the last PEA came out. So everything that you see there in the highlighted sections represents the expansion potential that we're going to be putting into our next resource in the in February of next year is what we're aiming for. That shows the mine life addition. And what's really nice about all of this expansion potential is it bolts onto the existing mine plan. Just this morning, we released the last of our what we call the Eastern Expansion Drill Program, where we drilled out across a 1.2 kilometer trend, a very, very shallow mineralization that we found on a scout drill program earlier this year. What we've uncovered is we've got, whereas we were thinking it was going to be one east-west singular structure, it turns out we've actually got three what look to be pretty large high-grade structures trending in a northwest orientation. And we hit some phenomenally thick zones of mineralization there, giving us shallow mineralization right around the existing mine plan. But also, this is going to lay the groundwork for a really clear and decisive expansion program next year too, as we follow this mineralization along strike on that northwest plain. In addition, earlier this year, we already stepped out 500 meters along that vein zone to the northwest and hit some very, very thick high-grade zones of mineralization there, which effectively is bolting on mineralization at that back end. You know, just this zone here, this northwest expansion zone there, you know, that should get us to that 10-year milestone with everything from the eastern expansion area is just sort of icing on the cake and showing a lot of upside potential beyond that. Very, very straightforward operation. You know, we don't have to build anything. We're walking distance to the town of Tonopah. We have access right off US Highway 95 that connects Vegas to Reno. There's 15 hotels and motels in Tonopah, so we don't have to worry about building man camps or moving roads or permitting power. In fact, there's a brand new substation right at the base of our property. But you know, as I see we're coming up towards the half hour here, I'd love to take some questions. So I see we've got quite a lot going on here. Let's see. Okay, so I see one from Brian Graham. Eric Sprott and institutional holders represent 41% of the shares. What are the what are discussions like that in terms of funding this moving forward? You know, we've had people chasing us to fund us for, you know, really since midsummer, and certainly right after our last resource came out, as it really was a proof of concept that the, you know, continuities established on these high-grade structures. We're in a unique situation now where we've got roughly $18 million worth of in-the-money warrants that we expect to see come in over the next 12 months or so at significantly lower prices than what we're trading at currently. We're sitting with about $7.5 million in the bank currently. And, you know, the drilling that we're looking that I think we'll look to kick next year off with, it's very, very shallow drilling, and it's just, you know, building out on the success we just had with this Eastern program. So, you know, we're happy churning through these warrants and really self-funding this thing, certainly with that PEA on deck in February. unless of course, we're to get some premium offers or really make a move. In terms of funding the CapEx, being really the only domestic silver developer out there right now, and the only one to probably get this permitted during the Trump administration on a full-scale basis, that opens up the doors for a lot of help, both in terms of potential credit solutions from the Export-Import Bank, or you're even seeing equity positions being taken from the administration, whether it's from the Department of War or their newly created Sovereign Wealth Fund. We're by the time we look at funding the CapEx, we're going to be a very different story than is sitting in front of you here today, because we'd have our permits in place too, and that's going to put a major target on our backs. But that's also a major re-rate on our multiples. So, in the interim, we're just focused on optimizing the mine plan, making it look as good as it looks, as good as it can be, and the economics are going to change wildly between that last PEA and what we're using here. Peter Epstein, the first quarter PEA resource update, will it be a meaningful increase in the number of AgEQ ounces, or a meaningful proportion of increase in the proportion of indicated versus inferred? I think you're going to see both. Now, when it comes to PEAs, it's, increased ounces are good, but really the focus is increased mineable ounces. That last PEA it was based off of 100 million ounce resource, but it only had 66 million mineable ounces in there. So we want to add specifically more ounces, of course, contained, but we want to add mineable ounces, which is the big thing. That's the mine life. So we're focused on that. We do also think, having had some time since that last resource came out just in September, that we might be able to get a nice little bump up in our indicated category as well, both from some further drilling that we've done, and also taking a look at other areas of the project where we did have 25-meter drill spacing already in place, because 25 meters is now sort of what the QP sees as the indicated level for the project. So we do think that there's a good chance you're going to see a meaningful increase in the ratio of indicated versus inferred. But yeah, we're going to be adding quite a bit of ounces, and most importantly, mineable ounces at that. Let's see what else. Let's see. What are the remaining technical risks, ground conditions, water management? Yeah, we're doing all of those hard yards behind the scenes right now. This is a district that's very, very well understood. Tonopah was known to have some of the best ground conditions in Nevada. It's the northern Nevada projects, the underground projects, that have really sort of flaky ground. At Tonopah, we've got a very, very competent rock. And in fact, when we took the project over, we were actually able to open up some of the old mine workings and fly drones down there. And they were in very, very good condition, and this is from 100 years ago. From a water point of view, we're actually deeded water rights from the original patents. And we're in discussions with the state engineer right now to appropriate those water rights that were effectively deeded to us. You're going to see a lot of new information in our PEA with respect to hydrology, because we've done quite a lot of hydrological work over the last year. We've figured out, we've drilled water wells, we've placed piezometers, we're getting a good idea of flow rates, groundwater conditions, where the water table is, and ultimately how that would factor into our operation. But a lot of that de-risking is already well underway, and that's a lot of those baseline studies that we'll be handing to the regulators once we've also have the engineering designs from this updated mine plan. And I see we've got one last minute. I guess, what I'll say is that there's a lot of questions here. I'd recommend anyone that wants to reach out to me directly, do so at andrew@blackrocksilver.com, and I'd be more than happy to hop on a Zoom or answer your emails. But andrew@blackrocksilver.com, and look forward to a really big start to next year with this resource and PEA. Right before that September resource, we started moving about 90 days before as people jumped in anticipation. We started really outperforming. We're right in that 90-day window now as people set their focuses there. So thank you for tuning in, and yeah, stay tuned.